please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The opening has come in the green as was the pre-market indication.
Big question, the big one to watch out, in my view, is the US 10-year yield.
I still believe that there will be some impact on inflation in the long term if the rupee continues to stay at this elevated level.
The key indices a bit in the red actually, but look at the way they've come off from the high point.
So this recovery of sorts, at least the little bits of it that we've seen, it's led to some sort of an upswing again in some of the sugar stocks. There are names like Granules. Yes, the index recovered quite a bit from the lows of the day, but nonetheless, I mean, the way stocks have fallen, the asset managers obviously are a huge issue as we started off.
Bear strike late once again as markets stumble in the last hour. The Nifty loses 100 points from the day's high. The Sensex sheds over 150 points, led by banks. Midcaps see sharper cuts.
Rupee gathers strength against the dollar after government hints at new measures to curb imports.
Banks and financial stocks underperform yet again. The Nifty Bank Index sheds more than 0.5%. Yes Bank, HDFC Bank and IndusInd are some of the top losers. Meanwhile, NBFC stocks, HDFC, Mahindra & Mahindra Financial and Bajaj Twins also slide in trade.
HDFC, AMC and Reliance Nippon AMC take a massive hit in trade, both tanking over 10% after SEBI announces a cut in the total expense ratio for mutual funds.
The Nifty Metal Index outperforms the key indices to gain 1% in trade, all thanks to steel stocks. JSW Steel, Tata Steel and Steel Authority of India are stars of today.
Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talk Back. This is the show where we tell you all that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh and with me Prashant Nair, my colleague. Prashant, what a day. It did look at one point in time that we will consolidate, but the bears came homing in again.
Oh, absolutely, Lata, and we're going to talk about all of that and more over the next 30 minutes. We'll, of course, take your questions. Our guests will answer the queries that you send our way. We have Gaurang Shah and Mitesh Thakkar joining in on the charts and the fundamentals. Gentlemen, thanks very much, both of you, for being with us here, as always. Before we start the Q&A part of the show, let's quickly wrap out what happened in terms of trade today. Lata, what are we looking at? Well,
we started off with the ambience in green. Asian markets were not too bad and Wall Street was up in the green. So it appeared that the Chinese retaliation was not as powerful as anticipated. And so the trade fears, the tariff fears were somewhat lower than expected. And that's why the markets did well. But we didn't seem to get as much green in early morning trade. But nevertheless, we were in the green. Helping also was a marginal inching down of crude. And this helped actually the rupee also start on a strong note. Now, early morning, you couldn't be very sure that it was strong because late yesterday, the rupee got stretched lower only at the last half hour of trading. So it was always expected it might open around 72.70 or 72.80, and it did better than that. In between, it seemed to lose way, but again came back decently strongly. But the markets still didn't pull back. The first sign of the rupee wilting, the stocks gave way and they kept giving way. Although the rupee did seesaw and strengthened at several points, we didn't see that rubbing off on the markets just yet. So it gives you the feeling that there is an inherent equity weakness related to rupee, but not entirely explained by the rupee. And of course, there were those pockets of weakness, financials once again getting hit and not recovering even when the yields fell. I mean, the financials fell when yields went to 8.14. Yields came down to under 8.10, and still you didn't see the financials recover. And finally, of course, this fear of IL&FS is there in the market. How far and deep can that destabilize the market? Some people have called it the Lehman moment in India. So that again is a worry. Mutual funds was the other worry, of course. Those two marquee stocks got quite a drubbing because they will not be able to make as much money as they have been doing so far from selling mutual funds.
Absolutely. So one thing is striking, Lata, while the rupee is the worst performing currency, YTD, I mean, one of the worst performing currencies, the stock market, the Indian stock market is still one of the best performing. So I think that's the broad overlay that, I mean, the point that you were making, the rupee is picking up, but well, the stock, it's not lifting the stock market with it. But, you know, you've got to look at it in context in terms of returns that we've seen through 2018. Well, let's just quickly run through stocks. So the sectors which were under pressure, you had real estate, FMCG and consumer sectors which were under pressure. So the cuts are on your screen. Large cap stocks which were down, there was IndusInd, there was Z. Z is down, what, 30% now from its highs. 100 rupees below its 200-day moving average. Bajaj Finance, we had Maruti and Lupin, which were other big sore points. Large caps, which were higher. Bank of Baroda, big cut yesterday. It came up about 2.5%. Coal India was another one. Gas Authority, Tech Mahindra, and ONGC were the other stocks which did okay. Broader weakness, I mean, the mutual fund companies and insurance and those companies. So HDFC, AMC, Reliance Capital, Reliance Nippon Asset Management. So look at the cuts across the board between 8 and 11%. Reliance Infrastructure was down. Jet was down. Escorts was down 5%. Apollo Hospitals, Godrej Consumer, and there was something like a Pfizer which was down quite heavily as well. There was strength in, again, sugar has this, is a thematic kind of a play. It sold off yesterday. It's bounced strongly. Dhampur, DCM, paper companies, something like a West Coast did quite well. Muthoot Finance, Union Bank was up. Union Bank was resilient through the course of the day. And there was Global Spirits, which has had a pretty good run all through this week. So that's essentially what happened as far as stock-wise action is concerned. Lata.
Okay, so that let's straight away take that to our guests and ask them what they made of the markets. First, for the here and the now trade, Mitesh, what will be your Friday trade?
Yeah, even Lata, I think the Nifty has come close to a support level. It's also quite oversold, but I still will possibly be exploring more of bearish trades. My sense is that the Bank Nifty looks very weak, and that still forms at least a third of percentage of Nifty's component. And I think the Bank Nifty could possibly decline towards 25,800 in the coming 1 or 2 weeks. So I would still be trading more on bearish side. And in case you get a bounce back on Friday, I think even more welcome to possibly explore shorting on the financial side.
Okay. Gaurang, is there any sector that is already looking attractive to you?
Well, good afternoon to you, Lata, and to everyone, or rather good evening. I think this correction, broader markets, if you ask me, Lata, FMCG stocks look quite attractive. Likes of Dabur, Marico, something like an Imami Limited. The consumption theme is not going to die down. And it's only that it was richly valued and you saw the correction coming. So we believe there is opportunity over there. There's opportunity in some of the private sector mid-cap banks, something like a Yes Bank or a Kotak Mahindra Bank looks quite attractive, including IndusInd Bank, if you will. And in the metal and cements pack, there are a lot of names that we are extremely positive on. So I think there are pockets of opportunity and not ruling out further downside in the broader markets, that is mid-cap and small cap. But prudent, like I've been advising since a very long time, focus should be large cap because that's where money is made over a longer period of time.
Okay, Gaurang, Mitesh, we're coming back to you with the specific stock queries now. But let's get into the second story, the macro story, which is essentially the rupee. It gathered steam against the US dollar. This after hints have been, the government has been dropping hints that new measures are coming along to curb imports. So hints doing more rather than actual announcements, Lata.
Well, absolutely. They are doing a lot of the work, and if they disappoint, then you know what happens. But to be fair, yesterday's rupee weakness was exaggerated in the last half hour, and a lot of dealers were saying that someone's playing the market in the last half hour and it will not open around 73, which indeed was the case. It opened around 72.70, so a good 20 paise stronger, or rather the dollar was weaker, cheaper by 20 paise. And it dithered, seesawed, with sometimes seeing 72.80 and sometimes seeing 72.50. But there is an upward bias to the seesaw. That's because, one, of course, as you pointed out, import curbs could come fairly soon. But more importantly, there was this rumor doing the rounds that oil company demand is not coming to the market. So is it going to the RBI? Our checks with oil companies said that they have not received any such instruction. But the market, in its wisdom, believes that oil demand is not coming. That is very much there in chit-chat. though not confirmed by oil companies. Be that as it may, it's been a much better day for the rupee. And my guess is if it's able to hold at 70 to 40, good. But one thing the government must beware, if you have said you are going to announce import curbs, then you better do that. Ideally, do it without leaking the news. It may have a little more impact.
I mean, the dribble-drabble kind of sort of takes the punch away. Absolutely. But we'll see. I think the DEA secretary today did sort of indicate that measures from the government on curbing imports will come very soon, quote unquote. So should happen, and we'll of course track that. So that's the rupee for you. Let's move on. And now we get to the stock-specific stories. Banks and financial stocks remained under pressure today. The Nifty Bank underperformed yet again to shed more than 0.5%. It was led by HDFC Bank, which lost over 1%. Yes Bank, IndusInd Bank and Kotak also followed suit. NBFC stocks also slipped in trade. Bajaj Twins, that is Finserv and Finance, HDFC, Mahindra & Mahindra Financial all ended the day between 1% and 4% lower.
Okay, with that, let's take in some questions, and I'm sure there'll be lots. Finance has been a favorite with the retail investors as well. This is on HDFC Bank, the question. N. Pathak has written to us. He says he has 400 shares of the company and he purchased them at 1865, 1865. Wants to know if he should hold or sell. 400 shares, 1865. Mitesh, what are the say 1 year charts telling you?
Yeah, so Latha, I think this stock has definitely done very well, and now I think it's got into some kind of a corrective mode. My sense is that I think the correction might get over closer to about levels of 1900 to about 1915. So I think there might be some more 3-4% kind of a downside left. That's where the longer term support's kicking for this stock, and I would not really be worried post that. So I think maybe if you can take another 50 rupees on the downside, I would suggest hold on. And clearly, the stock, once this correction is over, is likely to possibly consolidate and then get into an uptrend again.
Of course, he is still in the money. Normally, if someone asks you, should I sell my HDFC Bank shares? You would ask why. Why would you sell your flat in Altamont Road? It's almost impossible to get in again. Very quickly, Gaurang, you have an advice, Mr. Pathak?
Well, please add to it. Don't sell it. That's
all right. Okay. Well, we have one more question.
Yeah, Sanjay Bhai Joshi is on the line with us from Gujarat with a question on L&T Finance. Sanjay ji, what's your question?
Sir, 2 years I am holding L&T Finance. How look you this stock? Your opinion?
Okay. What's the outlook? We'll give you a technical and a fundamental view. Mitesh, what is the outlook on L&T Finance? It's of course seen enough selling along with the other finance companies.
In fact, Lata, this stock didn't make a fresh high this time and reversed from around 180 to 190 levels compared to the highs of 203. So maybe some more decline is still left. I would say possibly 130, 125 would be the best level where the stock has settled down. And I think, if you can add more on those levels, I would advise that definitely. I think the stock has gone through now about months of correction, and it's been about 8-9 months of, price decline and then rally and then again a decline. But I think around 125, 130, we should see this correction play out nicely, and then the stock can regain its uptrend.
Gaurang?
Well, Lata, so we don't have the clarity in terms of his acquisition price, but I believe it's going to be much lower if he bought it 2 years back. We're maintaining a positive view from a long term. We are targeting somewhere close to about 200 to 225 on L&T Finance and all.
Okay. Well, Mr. Joshi, I hope aapne answer sun liya. There is a good support at 125 rupees. So even if you see losses from here, it is not much. But both experts expect it to only increase, the price to increase. So they don't think you should sell out. Well, we need to take a break on that note. But before we go, we'll get you some more market opinion that decked the channel throughout the day. Views from the JP Morgan's top team. Take a look. We're going to be back in a jiffy.
We've had a very strong performance from here. I think in terms of where our Nifty targets are, it's probably a relatively modest upside at this point in time. If you look at some of the high frequency data points coming through, whether it's PMI, whether it's rainfall, whether it's the pressures from oil prices, I think these are going to be acting as headwinds, and we think the consensus earnings estimates are probably a bit too rich. they're about somewhere between 21 and 25% for either MSCI India or Nifty, and we think it's going to be closer to 15%.
The economic fundamentals of India remains super strong. I mean, the last quarter was the best quarter that India's had, with an outstanding growth of 8.2, 8.3%, and it was the best quarter of the past 9 quarters, and our forecast for next year is still that India will grow at a 7.3% GDP growth, which would put India as the fastest growing economy in the world. So the economic fundamentals, the demographics, the tech sector, the healthcare sector are still doing superbly well in the country.
India has 2 very good things for now. Number one, if trade noise escalates, you're going to be disproportionately less affected than the rest of the year. And that's pretty much what has been happening over the past 2 quarters, give or take. Second, India has a very strong base of earnings growth. So everything else constant, you might grow here 15% for earnings. Why? Demographics, infrastructure spending, and the reforms, which in essence is government shrinking, giving away for the private sector to perform.
There are much simpler solutions to these problems. There is much simpler explanation to where we are, why we are. But if you do not want to go with these simpler solutions and simpler explanations, instead we want to get tangled in the weeds with exports, imports, oil prices, we are going to come up with these kinds of very tangled solutions and tangled views. There is a very simple thing, and there is very little controversy about it. There are 2 reasons as to why the rupee is under pressure, like any other current account deficit. The current account deficit is rising, and global financial conditions have actually tightened through April till July. In August was very different. Then in August, emerging market risk was being reassessed.
You're still with us here on Markets Today Talk Back. Gaurang Shah and Mitesh Thakkar are with us, and they're taking our questions. We got through 3 of the top stories: markets, rupee, of course, the big macro stories, and here's the 4th one. Stocks of HDFC, AMC and Reliance Nippon plunged in trade today. This is a result of the regulator putting a 2% cap on the total expense ratio for mutual funds yesterday. The AMC is tanked over 10% in trade today. Reema Tendulkar is standing by with what brokers are making of this move. Reema, over to you.
A few brokerages, Nomura has downgraded a Reliance Nippon AMC to a neutral. They've cut the target price to 210. JM Financial too has cut the target price on Reliance Nippon. They've lowered the target price to 275. Morgan Stanley has written on HDFC AMC, where the target price is lowered from more than 2,000 rupees to 1,765. Though they continue to maintain an overweight rating, while CLSA on ICICI Securities says that the mutual fund distribution fees form about 15% of their revenues, and a 10 basis points cut in their fee could impact their FY19 PBT by roughly 4%. Back to you.
Okay, that's important. Some numbers coming in there, and price cuts were humongous. I mean, in terms of target price, Nomura, I think, cut the Nippon price, Reliance Nippon price by about 50%, from 315 down to 210. Likewise, they cut the HDFC AMC price also, but not by such a significant percentage. I think it was some 2,050. They brought it down to 1,760 or thereabouts.
But it's like Reema said, it's like putting a cap on how much money you can make. I mean, that's essentially what it is, right?
You have to play the volume game. Make less. No, I am with that argument.
Yeah.
When you have a fund manager to manage 600 crores, if it becomes 6,000 crores,
or
you're
60,000 crores.
60,000 crores, you don't have to pay him, 100 times the salary. So, I mean, I'm on SEBI's side and on the investors' side. But A. Balasubramaniam, the CEO of Aditya Birla Sun Life, AMC, spoke to us. Remember, he's former AMFI head as well. Let's hear out what he had to say.
If you look at one from a customer point of view, I think he gets the benefit of course, reduction in fees. At the same time, the larger players who have, of course, have an established track record for many number of years will continue to get their pound of shares as they move forward. See, from a customer point of view, he'll go by one, the fund house who are offering this product. Second is the performance, and third is the service quality, and fourth is the trust element, which also is involved, and fifth, of course, is the engagement of advisors with each of the customers. So all of them, I think, will be determining.
Okay.
Well, easy to assume that, yes, it will definitely disburse some market share from some of the existing players, some of the large players to the small players.
Okay, HDFC AMC in particular, recent listing, second month in the market, the high on the opening day was 1,834 rupees. It closed at 1,403, 400 rupees lower than the opening day high price. PR Sujay has written in with a question on this company, HDFC AMC. He's got 30 shares of HDFC AMC. He wants to know the future of the stock. Gaurang, what's your assessment? What would you tell him?
So I think after hearing and dissecting whatever has happened throughout the day in terms of commentary or views or verbatim from various heads of AMCs, what I understand is not the entire portion is going to be absorbed by the AMC. It will be passed on, and it remains to be seen, Prashant, who gets how much. Secondly, like Lata was mentioning a while back, I think it's going to be a volume game now. And I do agree with what was mentioned earlier as well, that the known names, credible names, will, continue to demand a premium over the others. So the only name that we remain positive, and as a disclosure, we had a subscribe IPO note, was HDFC AMC. So it would be interesting to look at this one, possibly at a lower level.
Okay. I could ask for a technical view, but there isn't much technical history. Would you want to hazard a guess, Mitesh?
No, Lata. In fact, I was to say that I would not be able to help much here. There's hardly any chart history.
Fair point. Let's move on to the fifth and the last headline for the day. Nifty Metal Index outperformed, and the key indices, it was the key index to gain 1% in trade. Steel stocks in particular lent a helping hand. JSW Steel, Tata Steel and SAIL, all of them were at the top of their charts. Let's listen in to JP Morgan's metals analyst Pinakin Parikh, who was answering to our colleague's question, is steel going the graphite way, which means very sharp uptick in prices?
The upcycle, which started around 18 months back, was essentially supply driven. So China cut the capacities, they cut production, and at the same time demand ex-China went up. So going forward, how spreads hold out will be a function of the incremental production cuts or production increases we see in China. My colleagues in China at JP Morgan do highlight that the winter production cuts are still on. We are still going to see production cuts. So from an India perspective, what I would look at is, even if current prices hold out and even if current spreads hold out, it is probably the best earnings environment we have seen for steel companies in India over the last many years. You throw in the rupee depreciation, you throw in very strong domestic demand, and the fact is that there is no new supply on the horizon, at least for the next 2 years.
Okay, we got a question on a steel stock. Karthik Dattani has written in with a question on JSW Steel. It did well today. He's been holding 40 shares of the company for the last 4 months. Wants to know if he should hold or sell. Mitesh, JSW Steel, I think it did sort of take out the recent trend highs today. Your sense?
Yeah, it's in fact made fresh highs, and the stock still looks very good to me. If somebody is looking at a few months of target over here, I think I would put a target conservatively close to about 490 to 500, though in an improved market situation that can be possibly overachieved. So I think for the timing it's in hold. I don't think the stock has got much downside from here. 380, 390 should be a good base in the short term. So if it's about 2 to 3 months kind of view, I would clearly suggest a hold with a stop at 380 for targets close to about 500.
Okay, and what would you suggest, Gaurav?
I think it has been one of the most outperforming stocks in the entire metal pack, Lata. And not only the fact that in China you have constraints in terms of capacity, domestically also, setting up new capacities is going to go through a difficult time. And more importantly, Lata, very recently, we saw the price increase as far as the flat and long products are concerned.